In this Track and Trade High Finance Trading Training video, I want to talk to you about overlay indicators. Now, the first overlay indicator that I want to talk to you about is the moving averages. It's the most simple of all, but yet, in my opinion, the most powerful of all indicators. Now, the way we get the moving averages turned on the software is just to simply come in and we right-click on the chart, and the overlay indicators are all listed right here on this middle banner right here, on this middle right-click menu. And you'll notice that we have a number of different overlay indicators, from the alligator to the parabolic SAR to the zigzag. But the one I want to talk about in particular is our moving averages. And we're going to come in here and click on the moving averages. And you'll notice that as soon as I turned on the moving averages, if I have this tab open, my control panel changes over to the settings for the moving averages. Now, if I ever go away from the settings for the moving averages, let's say I just click on the background of the chart, which takes me over to the chart settings, and I want to get back to the moving averages, all I have to do is I click this little button right down here in the right corner of the chart that says MA, which stands for moving averages. If I just left click on that, it takes me back to the settings. Now, of course, I can right click on it, which brings up a settings, and I can come down and choose the moving averages, which is already chosen. So now I have my moving averages list open, and I can come in and modify it and change it to whatever I want. Now, one of the things that we can do is we can change the period of the moving averages. Now, you'll notice that on here I have my first moving average line is set to a 5-day period, and it's a simple moving average based on the close. My second is a 10-day moving average, which is a simple based on the close, and then I have a third and a fourth and a fifth, and they continue higher and higher and higher. And to turn them on and off, all you have to do is click on the button here to turn them on and off, and you'll notice that they draw on the screen based on whether they've been selected or not. This one down here, being a 50-day moving average, if I click on it, you're going to see that it's a lot smoother line that goes through the middle of the chart. Here's one that's a 30-day moving average, which is a little smoother itself. And then we go back, and here's a 20-day, and it's even smoother, or a little bit follows the trend of the market a little bit more closely. Now, when we first started doing technical analysis, we started off with one moving average. And we were saying, wow, look at this. This is pretty cool. It follows the market pretty darn good. And we liked that, and we were looking at those, and we were saying those are moving averages are pretty neat things. And then we come in here and we said, okay, well, let's give it a little bit of a longer moving average. Let's come in here and let's use a single moving average of about 20 days. And we said, very good. If we do that, we'll notice that we can get some buy-sell signals in it, or some opportunities to get in long and short the market. So right here, whenever the market would cross over the moving average, we'd say, oh, there's a buying opportunity. Or right here, here's a selling opportunity. And as long as the market would stay below the moving average, we would stay in the market short. Or as long as it would stay above the moving average, we'd stay in the market long. That's a very powerful tool right there in itself. And so this is very powerful. But then somebody came along in their infinite wisdom and they said, what if we used two moving averages at the same time? Let's come in here and let's do a 28-day moving average and a 10-day moving average. Oh, that's even better. Now we get a signal. And we come in here and say, whenever the moving averages cross, that's our time to get into the market and go long on the upside, and to get in the market and go short on the short side, or to get out of the market. So this was giving us an average which told us to stay in the market and when to get out of the market, which became very, very powerful. And to this day is still one of the most powerful methods of trading. Now, most of your indicators are based on some kind of a simple moving average process of a moving average crossover. Whether it's over the top of the chart or whether it's down in the bottom window, most indicators are based on moving averages. And this is the basic concept behind them. And so now you know the basic concept behind simple moving averages.